Good day, guys. Welcome to Forex Walker. Welcome to episode 77. It's been a while since we've published any of our videos. Those other videos were automated, they've been uh, uh, scheduled, pending videos that I had to schedule over time. So here I am having the interest rate projections by the US dollar. And in this quarter, the fourth quarter, we were supposed to be buying the US dollar, and something that Jerome Powell uh, had previously denied had finally happened. He said they were not even thinking about cutting interest rates in December, unless if the economic reports that they were looking for were released. Remember, there's a government shutdown in the United States. I don't know whether that shutdown is still ongoing or if it had stopped. I don't know what's happening there. So what happens in a government shutdown is that most of the economic reports uh, that we use as uh, arbitrage traders, some of those economic reports are hidden from us, so we don't really get to receive those economic reports. And so some are released and some are not. You know, there's a lot of American propaganda where the Chinese economy is rising and the US economy pretends to be, uh, you know, pretends to be above the Chinese economy. But if they release everything, I'm telling you that US dollar will collapse. So that is something that I believe they're trying to hide from us, and they're trying to get other things like minerals from Congo using Rwandan military and all of those things. So they're trying to get something that will put them in profit over time. That's the reason why they keep selling weapons to Israel for the demolition of Gaza, and they keep sending weapons to NATO to be used in Ukraine. So they're trying to do something that will uh, act as a basis to remove them from the current recession. But once they release those the data that is unexpected, that's the reason why we end up having those issues that we are having. So here you can see that the Fed interest rate decisions were at 4%, and they expected a 3.75%. That is an interest rate cut of 25 basis points, and as expected, it was introduced here. And these are further economic projections. So they're telling you that first year they're expecting this kind of an economic projection, but here they're not really showing you anything. They're showing you previous and future. And I used to look into those things, and what I believe is important is the interest rates that were released now and the current. This is what I normally look at. So once you see any changes in the current, what happens is that the currency will move violently towards the current, even if you don't get an interest rate cut here. But the current tells you that there's an interest rate cut between these two. You will end up having a violent move based on the current. So I normally look at the current and the interest rate, the federal interest rate decisions. That's how I look at it. So we did get interest rate cuts. Let's listen to what Jerome Powell is saying in these interest rate cuts. You can see that uh, in in September the 17th, we had an interest rate cut, and October 29th, we had an interest rate cut, and all those interest rate cuts are in 25 basis points. And here in December the 10th, we had another 25 basis points interest rate cut. Let's listen to what Jerome Powell is saying. Here it says the Federal Reserve cut the federal funds rate by 25 basis points to a range of 3.5% to 3.75%. So there were some of them were thinking about a 50 basis points. That's the reason why they have a 3.5%. And some of them were thinking about just a single 25 basis points here in December. And in its December 2025 meeting, following similar reductions in September and October. That means they were all 25 basis points and in line with expectations. This brings borrowing costs to the lowest since 2022. So the borrowing cost is the reason why once a currency, especially a strong currency, once they introduce an interest rate cut, the currency will temporarily go bearish, but over time, that currency will pump based on the borrowing cost because the Reserve Bank will charge less on interest rates to the banks, and the banks will also charge less in interest to the normal consumers like you and I, the businesses. And once they do that, that means when the borrowing cost is low, that means money is cheaper. And a lot of companies are going to take loans. In fact, those who take loans without understanding monetary policies, they will take loans at high inflations, and that's not how you run a business. You need to understand macroeconomics, and you need to know exactly where to take a loan, which is best at the lowest uh, when the global economy has the lowest borrowing costs. So the reason why the currency will pump is because of the borrowing costs. A lot of companies are going to take loans, and because of that, there will be an increase in money circulation, and a lot of businesses will get a boost, and the economy, the currency will pump over time. But we're waiting for that time where the US will hold interest rates like what you see here. They introduced interest rate cuts and they held. And when they held, there were some beautiful bullish moves in the US dollar. So let's continue with the reading. The committee remained divided, with three members continuing to vote against the cut. So some of the members were against the cut, and the reason why that is because when we were looking at the normal economic reports that we look into to check whether the currency will introduce interest rate cuts or not. When we look into those economic reports, we can see that this was a hawkish interest rate cut. We call it a hawkish interest rate cut because the economy was doing well, and it was unnecessary for them to introduce an interest rate cut. So, three of the members of the FOMCs were the MPs were against the cut, and which hasn't happened since September 2019. So you can read the rest for yourself. You can actually pause the video. And this guy over here, these are the FOMCs. You can actually tap over here. It will send you all the way to YouTube to listen to what this guy is saying instead of reading the little bit of what you see. You can watch the entire conference, the press conference. It says here FOMC's press conference, and this guy is Jerome Powell. So you can look into every single currency and check the YouTube video to get more clues into the economic reports. So here you can see this is normal United States inflation. Here it says we're sitting at 3% inflation, which is well above the benchmark in the US Federal Reserve. For you to know what the benchmark is, you need to watch the FOMCs. You need to listen to this guy if you want to know what the benchmark is. And this is just the normal inflation. Let me show you what I normally look at. This is the, where is it? Where is it written? Here it says core inflation rate. So core inflation rate excludes energy and food, the normal food that you eat every day, and the fuel. The I mean, even when the economy is not doing well, you need to buy fuel for your car. You need to buy diesel, you need to buy petrol. So the energy involves the petroleum industry as well as the food, the sales of the food at the stores. So that is most of the time they call it core consumer uh, price index. So so it excludes all of those energies and all of the, because even when you're in a recession, you still need to buy fuel and food. So here, when it excludes that, you can see that we were sitting well at 3.1% and we fall short to 3%. So there was a down move, but here you can see that we're still sitting up there. But here you can see there's a down move. You can go into the core PCE and other forms of economic reports. Let's move back into the US dollar. So here it's the pound USD, which I will not be trading. I'm having issues, especially with the CAD. I was supposed to be selling the CAD and the CHF, and the CAD is also moving out of the recession, and it's holding interest rates, and it's difficult to sell a currency that is holding interest rates because you will end up. So the sales in the US dollar are to be delayed. They might be priced in well, but the trade will be taken based on instinct. So what happens here is that the market went to the highest peak on the pound US dollar. It went to the 50% fib and it came back to the previous shoulder here, and it dropped again to the next 50% fib, and it went back, which I don't believe it has to go all the way up there actually. It might come to the previous shoulder or below the previous shoulder, but it sits on the 23.6 here and it drops. So the problem is this trade involves buying the US dollar, and I don't believe it is a good idea to buy a US dollar that is cutting interest rates with the pound that is holding interest rates. That may not be an intelligent way of filing for your trades. This is the Euro USD. The Euro is also exiting the recession. Most of the economic reports in Europe are positive, but the problem with Europe is that it is in debt. The Eurozone is in debt based on the war in Ukraine. They've been loaning all kinds of money. So that entire continent is broke. So you can sell it based on that, but most of the economic reports coming out of Europe are positive, which makes it impossible to actually uh, trade that currency. So here we were supposed to be going short, buying the US dollar based on Jerome Powell saying we're not even thinking about cutting interest rates in December, but that was a long time ago. That he talked about that speech in I think it was October. So that was a long time ago. So here you can see that we had a rejection here on this smaller previous shoulder, but the main previous shoulder is up here. So we can actually reverse from here or touch this previous shoulder, manipulate it and drop. But I'm not buying the US dollar. I'm not even thinking about it. Thank you guys. See you on the next episode.